Welcome back, everybody. Deutsche Goldmesse. This is a fireside chat special here on Soar Financially, and I'm joined by none other than Egon von Greyerz. He's the founder of Matterhorn Asset Management and Gold Switzerland, and Alasdair Macleod, head of research over at Goldmoney. Gentlemen, thank you so much for coming out to Frankfurt. It's great to see you in person. We've done a lot of interviews online, a couple actually, at least, but it's always different in person. So I really appreciate it. And it's the first time we're meeting.
Yes.
So I tremendously appreciate
Pleased to
the
be
effort
here.
of coming out.
Absolutely.
And I hope you're enjoying yourself, obviously. But
Absolutely.
let's dive right in, because the fireside chat, we planned about 20, 25 minutes, so it's going to be a lot to pack in.
Okay.
Let's start with news this week.
Yeah.
Another bank collapsed in the US. When we did first interviews, it was like, okay, it was just for lack of a better term, a bunch of idiots at SVB that forgot to hedge. But now it seems to be spiraling out of control a little bit. What's your take on it, Egon, and how far do you see it spiraling out of control?
I'm pretty boring when it comes to these type of short-term movements because my view has been the same for the last 25 years. and therefore, I've been expecting all of this, like Alisdair, of course. And you can never forecast the exact timing of a collapse. The timing is a mug's game, and we're all mugs sometimes, but we can be wrong on the forecast. But the whole system, as my presentation says, the name of it is Banca Rota, the everything collapse. The system is rotten. The banks are rotten, and therefore they will all fall one after one. Of course, central banks so far is only little ones.
No.
Except for Credit Suisse, where the whole government had to come in and give support and force UBS to buy it at a price that they couldn't refuse, and they got help also from the government. So the system is rotten. It's only a matter of time now, how long it takes for all of this to unwind. It will only survive with funny money, and that we're going to see a lot of. We've seen funny money for years, but we're going to see more funny money, which means more printed money, and maybe they will have time to start the digital system, the central bank digital currencies. But even if they do, it will make no difference. That's just another form of fiat currency anyway. So they will print and print, and then I'm worried about the derivatives also blowing up and actually becoming debt, and that's another couple of quadrillion. So it's just going to happen over the next, as Alisdair said, it could be Hemingway. How quickly? How do you go bankrupt? Well, first gradually and then suddenly. And it could happen overnight, or more likely, they will anticipate at least the little ones and they will save all the small ones. And then in the end, they will have printed so much worthless money that they can't save the system anymore.
So maybe as a theme for our conversation, I mentioned before we hit record here, is like what's keeping the gold price up high? Like sort of like trying to find some reasons. So my question is maybe, Alasdair, for you to follow up on what Egon has said. We see a lot of money departing from the small regional banks. The question is, where is it going?
Currency and credit.
Yeah. So, but where is it going? And do you see that maybe flowing into gold? And it's a bit of a fishing expedition question here.
Well, when it comes, as I said off camera just now, it's not so much amazing that gold is going up. It's amazing the dollar isn't going down even quicker, because that's actually, if you look at the gold price, it just goes along like that, measured in goods and things, going all the way back to Roman times. It just goes sideways. And you get the odd crisis. The odd crisis is never in gold, it's always in credit.
Yeah.
And that will affect what gold buys. I mean, I can see a situation where these currencies, gold and the currencies of the other unfriendlies, as President Putin calls us, entering a sort of combined banking if you like, credibility collapse. And under those circumstances, the purchasing power of gold might actually go up, measured in goods and services, because people will be getting out of every form of credit they possibly can. But they'll only do that when they realize that it's not prices going up, but it's the currency going down. And that's always the death knell for a currency. And as for your comment, you've been expecting this for some time, so have I. I was sort of rather reminded, if you read that great economist, Ludwig von Mises, he really wrote entirely from about, from his days in Austria as an economist, all the way through, about how currencies would likely to collapse and the importance of anchoring credit to to real money. And he did that. I mean, that was 100 years ago now when he started doing that, and he didn't live to see it in his lifetime. Anyway, it's happening now, basically. So that's where we are.
Like, maybe for lack of better definition, do you see gold becoming real money again? Is that, or do you see at least a currency being backed by money again?
It's always been legal money.
No.
And there was a propaganda campaign. I remember it well. I think you probably remember it too, Egon, in the 1970s when the Americans gave up the Bretton Woods Agreement. They replaced that. First of all, they tried to sell some gold into the market to suppress the price because it was a bit embarrassing, to put it mildly. And when that failed, and I think Commerzbank bought out a whole 300 and something thousand ounces, which went straight into Arab hands. At least that was the story in the market at the time. So what they then did was they got a propaganda campaign persuading us that gold was history. Gold was no longer, they quoted Keynes, it's a barbarous relic. The Standard was a barbarous relic. And more recently, we've had it's a pet rock. I mean, this is a propaganda campaign. It does not actually change the legal position. And the legal position holds because it is actually founded on something which is very, very sensible, and that is something that people actually recognize as retaining its purchasing power value. And it's also because it was founded in Roman law, it's written into the laws of every European country and every country which we subsequently colonized, including the United States. So, this is everywhere. Yeah. And one country can screw up its credit system, but the price of gold will still go on, just like that.
Yeah, I mean, I agree with Alisdair, of course, but gold is nature's money, and it's eternal money, which means that is the only currency that has ever survived. Throughout the million or thousands of years that we've had gold, every single currency has gone to zero. And this one is now down to 98.9% of its original value, this currency system. And it's going to go down to zero again. But remember that going down to zero from having gone down 98, 99 means going down another percent from here, another 100% from here, not just 1 or 2%. Yeah. And that's what's going to happen in coming years. And nobody will believe the money printing that will take place to save this system.
We've seen a lot of central bank buying, but always countries east of Germany.
Yeah.
Okay. So I've heard a theory, and curious to discuss it because it's going a little off. Is there a mandate that Western nations don't buy gold because it would show weakness?
No, I don't think there is.
Okay, it's a bit of a provocative question, but I thought that was an interesting thought. It sounds like it's planned, so I'm curious to hear your thoughts on that.
Well, I think the West doesn't understand gold, but that's the big problem. As you said, the West has sold gold. You take country. I mean, the U.S. sold down their gold. The UK sold down the famous brown bottom, and then Norway, for example, has no gold left.
Canada has zero gold.
Yes, Canada the same. And I think the tradition of holding gold has been replaced by printing money, and therefore central banks don't see the purpose of gold. And now and I don't think any of the Western central banks have the amount of gold that they say they have. Whilst, as Alisdair said in his presentation today, a lot of the Eastern ones have a lot more than they actually say they have. So this is why gradually that balance of power will shift to the holders of gold, and the East is buying. Both individuals and sovereigns are buying gold, and the West just hasn't woken up to that yet, and they won't either. It'll be too late. And anyway, they probably have massive short positions. For example, if India and China buys gold, very often you see that, for example, big gold bars go from the US to Switzerland to be refined, broken down to 1 kilo bars, and then they're shipped on to the buyers in China or India. And that gold is normally central bank gold, which is lent to the system through a bullion bank. and the bullion bank issues an IOU to the central bank. And so my view is, and the central bank will still say that they have that gold because they have the IOU from a bullion bank that can never, ever deliver that gold, ever, because it's gone forever.
No.
This is a fascinating point, actually, because there's a guy called Frank Venerosa who did some analysis. I think, was it for Sprott, going way back, and he stood up at a speech in Lima after doing some analysis, and I knew he spoke to the guy who was responsible for the foreign exchange department in the Bank of England, etc., and he reckoned that at that time, between 10 and 14,000 tons of central bank gold was out on lease or swap. And the way he described it, it is adorning the women of Asia and, not China, but Asia, India and so on and so forth. Yeah. Now, at the time, 14,000 was roughly half the declared gold reserves of the world's central banks. So it raises the question, what is the situation now? How much gold do the central banks, and principally, I mean our central banks, actually have compared with what they declare? I suspect there is a big shortfall in there, which could become increasingly embarrassing as the gold price rises, or put more correctly, as their credit collapses. So this is I think that's yet to be seen.
Yeah, it was interesting because when Germany tried to repatriate some of its gold from New York, it felt like there was a flashlight shown or pointed at the situation, and there was a lot of dancing around.
It looked as if
sending it back, and it took longer than
they said
a pragmatic mind would think.
Yeah.
Right?
They were told they can get it a few years later, but not now. Exactly.
Yeah, but so, I mean, it's Germany's property.
That tells you everything.
Exactly.
There wasn't
Germany's
any gold.
property. So, and I mean, the property rights that governments don't respect it. We had a situation with Venezuelan gold, where the Americans told us not to respect the Venezuelans' request to repatriate their gold. So they made up some sort of excuse like, we don't recognize the Venezuelan government as a democratically elected government. We recognize this guy, I can't remember his name, instead. So we're not going to send the gold back. Hold on, it's their property. It's not, we were just doing the Americans' bidding, but we were breaking our own property laws and our own credibility as a main operator in markets as a result. I mean, this is very important and mustn't be ignored or understated.
Holding gold hostage is like weaponizing the monetary system.
It's exactly. It's the behavior of a bunch who say they've got a lot more than they've actually got, and that is a crisis yet to unfold.
It is, because of this is what the East will do at some point. Okay, we got the gold backing our system here now. Show us your hand.
That leads me actually to the next question, because I was wondering, so if the yuan let's assume the yuan, for example, were to become the next world reserve currency, what role would gold play in that scenario? Would it have to be a yuan backed by gold? Let's call it a new yuan, for lack of a better term, backed by gold? Or what's gold's role in that scenario of a new world currency?
Well, we don't know what it will look like. Well, of course, the BRIC countries are talking about always having one currency and possibly gold backing it. But my strong view is I hope that gold will not back any currency, because as soon as it does, it'll be subject to manipulation again, like it is now. I'm a great believer in free gold. Free gold means, of course, that you wouldn't have a system of futures and derivatives where you could manipulate the gold price. But that can only happen when the West collapses, because as long as you have these bullion banks that trade gold to a volume that nobody can even fathom how big it is, and I mean that trading, in my view, is very much to hide the actual problems that they have in the system. So they're working with derivatives and futures and in order to cover the enormous shortage there is in the system. So I think I'd love to see free gold not backing any currency, because that in itself will lead to problems longer term, in my view. But the ones who have the gold have the power. And now, since the West, we don't believe the West has the gold today, or the US especially, or Germany probably only has half the gold. And therefore, but the East will have so much more gold than exists in Western central bank. So therefore, whether they back the currency or not is irrelevant. They will have the gold.
Do you share that view as well? Like,
No, I've got
where do you sit?
a bit of a different take on it. I think, well, first of all, the strategy of China and Russia is basically not to create a crisis in the West. It is the West that's creating its own crisis. So I think Russia and China, they won't do anything to aggravate the situation. Why? Because that could probably lead to war immediately. I mean, the war that we have is actually a financial war, if you like, on the quiet. You don't want that to become visible, because if it becomes visible, the conflict escalates. So they're taking the view that let the Americans, let the West make their own mistakes, and it will come to us. And that's what they've been doing. And I think the only way they act, if you like, aggressively, is if they're forced to do so. And I think this banking problem is probably going in that direction. There will be an increased demand for a stable currency, which is independent of our banking system, and it will need to be backed by something. So I understand totally what you're saying about free gold and all the rest of it, but I think that the reality of it is that at some stage they will come up either with a trade currency or probably backing their own currency with, and remember, we're talking about credit here. Right. Currencies are credit, okay? So, and nobody actually, goes and exchanges goods for gold, unless you're Ghana and you've got nothing else. What you do is you create credit on the back of your gold, but you need to secure the value of that credit to gold in order for that credit to be stable. And that is eventually, I think, where Russia and China, and possibly if a new currency comes out, but I think it's almost redundant from the start, for this one that's being planned by Sergei Glaziev for the Eurasian Economic Union. We don't know whether they will do it properly. We really don't know. But I think the prize, as far as countries like Russia are concerned, is that it means that a stable rate of interest would fall from the current level of 11, 12, 13% down to 2, 3, 4%. I think what that would do to industry, and I've seen enough examples of how credit works under a gold anchor. I'm going to call it a gold anchor. It's probably a description which might satisfy you slightly more than a gold standard. If you tie it to a gold anchor, you can actually increase the amount of credit quite a lot before you start threatening the peg. And you need that for industry to be able to invest in production, to produce things that consumers want. And the other thing we really need to see is the end of this myth about the savings paradox. People have got to earn enough not only to cover their expenditure, but also to save. And this idea that consumers, you can run out on a credit card or whatever, that's going to die. That's got to go. And go it will. Savings are central to the division of labour. And we have an economic system, all recommended by economists, who are saying exactly the opposite. In fact, I think we can agree on one thing here, and that is anything that a government economist says is 180 degrees diametrically from the truth, or from reality.
Now I've seen it interesting, like yesterday I was watching Bloomberg, I think 65% of Americans can't afford a sudden expense of $400. That creeps up on them.
Well,
right? So that comes to their savings topic,
well,
right?
I mean, I remember there was, I think it was Daily Telegraph about 10 years ago, maybe even 20 years ago, was reporting that 70% of the population is living paycheck to paycheck. In other words, if they don't get the paycheck at the end of the month, they're in deep trouble. And the same in America. And I guess the same in Italy, the same in France. Less so in Germany, but probably going that way.
It's heading that way, definitely. I want to come back to the gold price and discuss what's been happening over the last few months as well, because the gold price is hanging in really, really well. Just until recently, we've seen quite a bit of volatility in the gold price, with sudden moves from, let's say, 1615 to 2000 within a very short period of time, for gold especially. But now it's been hanging in there above 1960 or around 1960 for almost, I want to say, 2 months. I don't have a chart in front of me. It might be off by a week or so. Egon, what's holding up the gold price? We've discussed a few things, but is there a number one reason for you, or is it just a hodgepodge of everything?
I'll tell you, I don't worry ever about the gold price, because I know history is on my side, and I know that central banks are on my side too. They will always destroy the value of the currency over time. So if you're a short-term speculator, you shouldn't hold gold ever, because you will always lose. You'll buy high and sell low. If you're a wealth preservationist like we are, you have it for insurance for the longer term, you'd never worry about the price, because you know that gold is always measured in worthless money going to go up in value. So therefore, we've been into gold for almost 25 years now for ourselves investors, and then open it up for other people to be able to preserve their wealth too. And I've never ever one day worried about the gold price, because I know that you have to be patient, because there are periods, it went up from when we started from $300 per ounce or £200 per ounce. In dollars now, we are 2,000, and in pounds we're up at 1,600, so 8 times, 7 and 8 times, 7.5 and 8 times. But that's not real money. It's just, all you've done is just protect your money, and therefore, anyone who focuses on the gold price is actually holding gold for the wrong reason.
Good point.
It's
a different aspect. Either investing and trading.
Yeah.
You can trade paper gold for all you want there.
If you're worrying about gold, you're worrying about the wrong thing. You should be worrying about the dollar, the euro, pound, and particularly since all the central banks are deeply into negative equity. They're all bust, and we expect them to recover a broken commercial banking system. What's good about this? I can't, I would worry about the currencies. I wouldn't worry about gold.
Yeah.
Gold.
Try reaching into the pocket of a naked man, right? So
Something like that.
I don't know. There's a saying in German. I just translated it, so I'm not sure it makes sense. But
That could be misinterpreted.
I'm trying to make a point.
Yes.
So, but Egon, curious, like a follow-up question to what you had mentioned. Now, did you see? And you don't have to give me specifics, but I'm curious if you see an influx of interest in your service, meaning wealth preservation. Has that changed in recent months? And I'm curious
the interesting thing is, as I said, we've been into this for almost 25 years, and we have grown every year, often substantially, sometimes more slowly. Obviously, price does affect the short term when people buy, and we are only preaching to the converted, first of all. People who buy gold with us hold it with us. They know through us. It's their gold, and they hold it. They have direct access to their own gold and all of that. But we are the one facilitating that. And they're not sellers. But remember, so they are a very minuscule part of all investors in the world. Total gold investment is 0.5% of world financial assets, and the wealth preservation part of that is a very small fraction. So yes, we are seeing, and we've seen continuous growth from investors and from bigger investors also. We don't cater for the gold money type of retail investors, but for bigger investors.
I'm just curious if there's a mindset change happening in the last 12, 15, 16 months maybe as well.
No, I don't think there is. Because the majority, the masses still don't buy gold. They're not interested in gold. Institutions don't buy gold. Hasn't changed. So there is no change here. This is a wonderful thing. Gold is at a high even against the dollar, which and against all other currencies, gold made highs already some time ago. And if you take against the euro, gold only went down 1 year, 2012 to 13. So it's one down year for gold. So gold. If you look at a long-term chart of gold, it just goes up and up. So therefore, but the gold market hasn't started yet because investors haven't realized what's going to happen. They haven't understood, if nothing else, if they don't believe in wealth preservation, they must believe in actually inflation destroying the value of their money. And that will come, and so will institutions, of course, because they'll be told by the boards that they have to have certain inflation hedged. But even if they increase that from 0.5% to 1 or 1.5%, there isn't enough gold in the world for that, except for at
higher
much
price.
higher prices. And that's the only way
Lower value of their currency.
No. I'm actually a bit shocked.
that's the only way that future
like,
demand can be satisfied with higher prices. And that's going to happen. I think the gold market hasn't started yet. And this is what's so wonderful. Prices have gone to the levels now of high. Nobody talks about gold. It's not on any front pages, nothing. So that means that this bull market has very, very long to go.
Yeah.
And that's why I never worry about the price in the short term.
Yeah.
Interesting. Like, Alisdair, want you to chime in just what you're seeing at Goldmoney as well. Just curious. But I'm just shocked that you're saying that because we've seen at least a year of high inflation, but you haven't seen an influx in interest.
Well,
so
except
we see continuous inflation.
Yeah, but it's like not a spike or like, you know what I mean? It's like it was.
But as to your point, I mean, we have a world of very rich people who've made their money out of a fiat currency system, basically. And the way they think is that I can use my money to earn interest or to earn a return. If I put it into gold, I'm not doing that. And that's the extent of their thinking. And I think, as to your point, that lot have yet to come on board. And we're talking about potentially huge amounts of money. And it always happens with foreign interest first. It's the foreigners who are invested in a currency which isn't actually central to their operation, but might be a reserve for something else.
No.
They're the people who trigger a collapse in the currency first. We saw it in Germany in 1922 and 23. And then, of course, there comes a point where the domestic users of the currency begin to realize it's not prices going up, but it's the currency going down.
No.
Now, once they do that, it's doomed. It's over. It's over for the currency. So what I would expect to see in the coming months is foreign money, and the $7 trillion of deposit money through the correspondent banking system. I would expect to see that coming out. I would also expect to see on rising interest rates, because interest will respond to contracting credit, which will drive up rates. So the Fed, I don't think, has got control over this. What we will see is portfolio liquidation as well. And that is a further $24.5 trillion, including US treasuries, corporate bonds, and portfolio investment in US equities. So there's a lot to come out. And how that's going to be managed by Americans who've got virtually no foreign foreign currencies at all. I mean, just looking at the cash bit, $7 trillion of deposits in US dollars. The Americans have got $382 billion to absorb over $7 trillion. This is an imbalance which,
just doesn't add up.
As a market man, you go in and there's only one thing you do. So at some stage, this is going to be realized. And I think this banking crisis could well trigger that.
But that in itself is a problem. I tell our investors, don't wish for the gold price to go up, because when it does, your quality of life will be a lot worse than it is today. So therefore, just be satisfied with gradual increases, which we're seeing now. And if we get that panic into gold, which is very likely, the world's going to be horrible, absolutely horrible. So,
I agree.
I prefer this. Fantastic the way it's gone up without anybody being interested. So that means that you're nowhere near at any top of any kind in gold at this point. Short-term top and long-term is always going to go up against money that always goes down to zero. So that's very easy.
Fantastic. On that note, I think we're going to wrap up this conversation. Fantastic. Gentlemen, thank you so much for joining us here. Tremendously enjoyed it. Egon, Alisdair, thank you so much. And to everybody else, thank you so much for tuning in. Deutsche Goldmesse Fireside Chat with Egon von Greyerz and Alasdair Macleod. Thank you so much for tuning in. We've got lots more content coming, so stay tuned. Subscribe to the channel, hit that like button, leave a comment. What do you think is going to happen over the next few months? Really curious, and we'll be back with more. Thank you.